if
to
you have
go
a
buy the data.
business that is growing at 4% a year and people think it's going to continue to grow at 4% a year, it just doesn't make sense that it trades at 30 times earnings. Like there's just like, it's just really hard to, unless they think the earnings are going to grow much faster than the revenues or something.
Well, this is all within the last 15 years, right? Like these financial data PRA businesses, price reporting agency businesses, have really sort of caught wind in the last decade. And the reason is because Wall Street, the value of being a benchmark in an industry means that I am able to go create derivative products and derivative source of income that has nothing to do with the underlying subscription to the data product.
Yeah.
And I think
I'm in the
that's
wrong
where,
business, by the way. Like all my data companies trade at, let's say, 4 to 12 times earnings or something like that.
well, I think it depends on, it's interesting because we see a lot of data businesses in our space where, someone has marketing intelligence or lead generation, things like this. Those are trading at very different multiples. The most valuable buyers of data businesses are on Wall Street.
Yeah.
They're the Wall Street. It's the Preqin sold, I think, for $3.8 billion. I think Blackstone bought it.
But that was growing fast.
It was, I don't know the metrics of the business.
I think they were growing pretty fast, yeah.
But Opus, which was the oil price reporting service that Dow Jones bought, it was growing 6% a year.
6%?
They paid, I think, 15 times ARR. It was 120 million in revenue. They paid 1.8 billion. I think, again, this is
what? Yeah, this is insane.
Lloyd's List, which is the oldest data business in the world, growing at 4%, like growing at inflation levels at 4%, and it traded at 9 times ARR. Like it's because
crazy.
Because Lloyd's List has this ship registry that could sell it to insurance companies and they could sell it to Wall Street firms. And that's where all the money's at.
But maybe the buyer just believes like they could grow it much faster or something. And by the way, I know at S&P, they often buy things and then it does grow much faster because they can stuff the channel. And
that's the whole thing is if I'm we sell a lot into hedge funds. Our pricing data is sold into big financial institutions. And the hardest thing so if you took our business and you plopped it inside of Bloomberg, again, I'm not suggesting that we're selling Bloomberg. Although if they're listening to this call,
totally. Yeah. And they do, by the way, we literally have like hundreds of people from Bloomberg who listen to this every week. So
well, call me up. So I'm happy to have a conversation. But let's say that I was to sell FreightWaves or SONAR, my data product, to Bloomberg. What Bloomberg would be able to do is, I had 50 some odd hedge funds. Like I said, we're signing 3 to 5 up a month. The hardest part of being a point solution or a very niche data product is getting through corporate procurement, and in financial institutions, it's getting through security compliance, back testing, all the stuff that it takes to get a $100 billion fund to buy your data, that you've got to prove that there's value and there's procurement and all this. Bloomberg already has done all that work. And so for them, they could take my 50 logos in financial services would go to potentially 5,000 almost overnight because they've already done the work. And they say, hey, we have this new data product that you can subscribe to it. That's $50,000 to $100,000 in ARR, and boom, you're off to the races. And I think it's the same thing with like S&P. They already sell into something like 40,000 corporates. And so for them, adding another data product is just adding another revenue stream that doesn't require them to actually build anything. And the great thing about financial data products specifically is there's nothing to be done. Like if you're reporting benchmark prices every single day, you've already trained the model to do that. And you may have a small team cleansing the data, but these businesses can get to very high margins if you're not growing them. Like if you're putting it inside the S&P or Bloomberg ecosystem, you can get our business to 75, 80% contribution margins and never have a direct sales force that you have to contend with because you're already in the distribution channel.